Hello, friends. This is Giuliano, and it's the 10th of April, 2022. I'm going to talk about the Bitcoin price chart, take a look at what's been going on, and reevaluate what could be expected based on these recent price movements. Yeah, so definitely not as exactly expected there. We didn't move high. We didn't stay high enough. We retraced too far, and now we have broken this move as a potential breakout impulse move. We got rejected at the 200-day moving average. Yeah, and so then let's just take a look more closely where we are. This is the daily price chart, and I just want to actually jump into the weekly price chart and just give a sense overall. Definitely need to consume more time. I'm considering this still to be an irregular flat with a C failure, but on the daily, it might count a bit differently. Also, we're doing candlesticks here, so is that even true to the Neowave? No. However, we get a good sense of it overall using the logic and the rules. So in this case, if we take the rules, at this point, starting the A here with a complex correction, and then the B over here in July, 19th of July week, starting the A in the 12th of April week, ending the B in the 8th of November week. We add that all together and we look for a potential C. So we take the A plus the B, and C comes right here. Oops. C comes right here where we have it labeled A plus B equals C. So this here around the week of 6th June becomes our length of the C. Okay, so that allows for an ABC flat pattern. It also allows for this, how do you say, double bottoming effect that we see often, W formation, if it's going to be part of something bigger. Unfortunately, though, yeah, breaking down below this 20-week moving average is a sign of weakness. However, we have the whole Ichimoku cloud below us. So that could still serve as support as the price chops. And wouldn't you know it, there's a potential for price chopping all the way into June. So let's see how that works. Okay, that's another 6 weeks or so. And I think that's what we're looking for, is another 6 weeks of weakness. Okay, how weak will it get? Well, it depends. Are we in a macro flat pattern like this with the A, B, and C? Or are we just starting a bigger bear market and we've just started an A and then we're moving to a B and then further to a C? That'll lead us down to this 200-week moving average. And I have that plotted out, and it gives a nice one-to-one relationship here. If we take from the beginning of that move, we call that an A down to here, and go to this top here to the end of a potential B. And we get to a one-to-one, which would be, if we watch the 200-week moving average, if we watch that moving up, it roughly can meet around the one-to-one relationship, and that would be around 23,000. So who knows if that's the case. I mean, I'm less likely on that one, but of course, there's a lot of calls for extreme bear. I think we'll have more of a local bear over here, more further correction, continue eating away at the time without eating away more at the price. And yeah, that'll take us to 6th of June. If we use the current move as the beginning here of a bigger bear market, and let's say we go A plus B equals C again. Oops, that's the wrong, we're looking for this one, time extension. A plus B leads us to here, equals C. That A plus B equals C brings us to 15th of August week. So if we're going super bear down here, then, you know, of course, it makes sense that it would continue further into the year, into the August month, you know. Now, the other consideration, though, is that this would have to be a top and we'd have finished some sort of ending diagonal, and it just makes everything a lot more ugly and weak. And yeah, sure, that's possible. It's definitely possible. But I get the sense it's less likely. But of course, don't take my word for it. Let's just stick around and watch and find out. Overall, these seem to be really good levels to be picking it up if you're looking to buy. And currently, it looks like down is the local direction it wants to go. I'm still sticking with this ABC flat pattern as a general energy of this whole move, meaning we clear out whatever we need to. A plus B equals C is the end of June, and then we can move off to the races, and maybe that will correlate with a change of sentiment in let's say in financial markets. Now, I guess that's the only thing really that I wanted to mention on the weekly. Watch out for this June timeframe for then A plus B equals C. If we were to look more closely on, and that's for the macro flat, if we're going below and breaking down further, then we're talking A plus B equals C probably gets us to August. Yeah, so now we go to the daily and say, okay, fine, like if we want to keep counting, how would we do that? How can this be considered as similarly part of it? Now, one thing to consider if you're watching this is that a lower time frame does not have to count the same way as in a higher time frame, although it wants to fit as cleanly as possible. However, it doesn't have to be the exact same count. So anyway, having said that, we're working with a terminal pattern for the whole move, and it's some sort of 1, 2, 3. We're gonna now, instead of having the 4 end over here, or sorry, here, whoops, sorry, my bad. That would have been the 5. Instead of the 5 ending here, okay, and the 4 ending over here like we had it before. Now we can allow, since this price went higher, it broke through, this has to be the end of the move. It changes where the trend line touch point is. If this is gonna whole thing gonna be a 4th wave, then we are looking at this being the end of that 4th wave, and now starting some 5th wave where it would end. It's not clear, but of course, if we go with the A plus B equals C timeframe on the higher timeframe, then something around this June timeframe is reasonable. And so, yeah, that's like another bunch of weakness. Now, here are some levels to consider. We have this upsloping trend line, and that fits basically 1-to-1 with this move down, a move up, and then a move down. That's 1-to-1 there. But you know, if we're looking to go until June, then it's going to take a while chopping around. So look also for this lower trend line to be tested and likely breached. And then the question is, what of the horizontal levels? What will happen at these horizontal levels? Will price touch? Will it break below, or will it be contained here in these levels? And will it take its time? Maybe it's going to go up and chop a little bit first up into the 44 level, 44.5, lower side of this 20-day moving average. But right now it's showing so much weakness. I don't see why it doesn't come back further down, at least to the lower end of the Bollinger Band. But again, that's right. Like maybe it's just a chop we're going to be looking for here, sideways and mainly down. Like there's definitely a lot of room to go down and still not break some of these key horizontal levels down here at 34 and about 33. So, and that's not even looking further left. And then we can see all the way back here are some price levels down into the low 30,000 level. But then we go back to the weekly and we see the Ichimoku cloud, and it looks like the Ichimoku cloud is something to consider. Definitely consider the Ichimoku cloud as a supporting region, and maybe the price just needs to go above the 20-week, below the 20-week, and you know, just do its thing, and the 20-week will play around the price, and then it'll find its way higher. That's the thought if it's going to chop around here, and then you get a little bit of a narrowing of Bollinger Bands and leveling out of things. Otherwise, you know, yeah, there could be enough fear in the market to take it down to these 23 levels. And then at that point, I mean, all bets are off for a longer term. Then we start talking about going to August. And then from there, you just need to repair. I mean, you're just going to be making a bounce maybe to the Ichimoku cloud and then coming back down further. And it's going to be rough and will take longer into 2023. So still working with the flat pattern as a primary and looking at price action down here. Ichimoku cloud goes into about 34,000. So, you know, you can wick below, but that's on a weekly basis. So on a daily basis, who knows where this price might head. But again, that gives us room down to this 34, and you're still in the Ichimoku cloud, roughly. Let's see. Okay. So around here, you're still within Ichimoku cloud. You want to wick below on a daily level, you know, all these things. Okay, I think that's about it for now. I also wanted to show that, okay, the other question is, isn't this wave 4 way too big? Like, look at the size of these moves here. Look at the size of these moves compared to your wave 2. And not only that, like size and price, but also in time. It's such a longer time. So to like, can it even relate to the wave 2? And what does it compare to the wave 3? Well, generally 3 to 1 or 33% of time is the relationship. So if something is either 3 times bigger or a third of the size, then within that range, then it works. It can kind of relate. But as you start getting more than 3 times the size, then it starts getting a little unreasonable. So in this case, depending where you want to start this 4th wave, are you starting it here? Sorry, the 5th wave after the end of the 4th wave. Are you starting it here? Are you starting it here? Either way, this blue line here is 3 times the amount of this 1 to 2. And we've taken it here from the wick of 24th January. And 3 times that brings us over here. So it's still just about 3 times the size of the 2nd wave. And if we want to compare instead the 3rd wave with this 4th wave, starting here at trend line touch point, and we come back down all the way to here, 24th January. In fact, it's not even 3 times as big as the 3rd wave, but it's definitely bigger than 2 times or even 1 time. I mean, you want it at least to be 1 to 1. So in this case, it's all still works. It still follows rules reasonably well. We have this 4th wave trading heavily into the 1st wave territory and taking a lot of time. That's what we've got right now. Let's see what keeps happening and how the price goes. But generally, around the 6th of January timeframe, the price should be around the 61.8% level, around 41,000. And at that level and around that time, if we're there, that's a really good sign that a takeoff could be imminent. Yeah, and of course, that if the price is around here, it most likely will have come from somewhere lower down within the window between. So I guess that's it. That's all I really have to say about the BTC price. I think that we are going to see down. I think it's going to be more of a local thing. I don't think we're having a bigger bear market, but of course, what do I know? So anyway, stick around for more and we'll watch it together. I think overall it's been reasonable, except I've definitely been caught out during this chop. It's just been very confusing. And I thought, I mean, of course, the market made us think that it could be going to the next level and breaking out and finishing this whole move. But yeah, June has always been one of the dates that we've been looking at for a long time now as a potential ending of this larger macro pattern. And this is looking like the best time frame for now. All right. And it allows us to have a very sexy double bottom, you know, right here. I think that would be incredible. I thought maybe we were getting it right here, but on a bigger scale, it's like you do it a little locally, but you also have to come away from it and come back down to really instill that double bottom action. I know that that's not a very technical term to call the double bottom, but anyway, there you have it. Let's see what happens. It's not guaranteed to look like this. Everything I've drawn so far doesn't necessarily happen like this. So anyway, we're going to see. I think that's it though for me. And until next time, the other thing I wanted to share is on the monthly. The big danger is this 20-month moving average. So yeah, that's really the question. Like you're at 40,000 at the 20-month moving average. So where is the strength? Where's the price going to be? And will it close below? Possibly, but then you're showing more weakness on a monthly. It'll have to turn around quickly the month after if it does. And luckily, you know, we have April now, then you get into May and June. And so there's definitely room for that. There's definitely room for a breach of the 20-month moving average, whether it's by a wick or could be even a close. As long as you get back above it, it just becomes a deviation. And then, yeah, we'll see. All right, good luck out there. Otherwise, 23 on a monthly time frame, it's like, that's tough because Bollinger Band's all the way down here. And if you're going, you know, the principle of Bollinger Bands is when you reach the top and you exhaust the top and you come off of it, and then you test it again when you come away, and then you come to the 20 moving average and you hold that thing, and then you break below it. Top of the Bollinger Band comes to the lower end of the Bollinger Band. Lower end of the Bollinger Band comes to the top of the end of the Bollinger Band. That's just how it works. And then sometimes it stretches them to the upside or to the downside. But the principle of Bollinger Band is goes to the top, goes to the bottom, goes to the bottom, goes to the top. On the monthly, it hasn't done that. On the monthly, we haven't done that here. And on the monthly, we haven't done that here. You could argue about this wick, but who's arguing about that wick? Not me. Yeah, so maybe on a monthly, it doesn't need to. That's a lesson for us for monthly Bollinger Bands. Okay, monthly Bollinger Band, it could come down to this 23 moving, 23,000 level, and swing back up and stay above this Ichimoku cloud on the on the monthly Ichimoku cloud that's starting to form, and that's at about 35,000, 34. Interesting. Okay, so that was a good quick lesson about Bollinger Bands on the monthly. On the weekly, you definitely come back to the lower end of the Bollinger Band, top of the band, bottom of the band, bottom of the band, top of the band, top of the band, bottom of the band, bottom of the band, top of the band. So that's definitely a common thing on the weekly time frame. But on the monthly, I guess we have not seen that yet. So interesting. Okay, I'll leave it with this. Is it going to be an Ichimoku cloud support? Or is it going to break below and then become an Ichimoku cloud resistance? All right. I'm calling macro flat as the first count, but you know, really, there's a good chance that you can't even count Bitcoin using Elliott wave, Neowave. But anyway, or I shouldn't say you can't do it. I should say that it just doesn't follow the expected rules in the same sense. Anyway, we'll see all about that. Okay, we're going to definitely watch price action. Price action is going to be the key one way or the other, whether we calling patterns based on Elliott or not. But you know, a lot of the Neowave Mealy extensions and Mealy method of rules of logic are helpful for sure. So we're going to keep with those all the way through. All right, I think that's it for me. Until next time, wishing you very well. Love, peace, and happiness. Goodbye.